So, when we are faced with very weak fundamentals internally, both in terms of growth metrics and the challenges posed by inflation and interest, and also, simultaneously having very high fiscal as well as current account deficits. So in this scenario, we will continue to remain vulnerable to all major global events. Of course, tapering would definitely impact us much largely, but some of these events like passage of budget in US or the renewal of debt ceiling, some of these also would make our markets nervous. So is, of course, to some of the other global markets, but we will definitely be a little more, sharper in giving in. So very broadly thinking, we feel that the volatility will continue to be very high, even probably during this month, and the downward bias probably should continue.
But you're not expecting any steep cut as such. You'll probably just see us hovering around this level, maybe a slight move down, but don't anticipate very sharp declines, because we've got earnings season also, starting off mid-month this time.
So, as the way the stage is being set, I think a very sharp cut that we saw last time, that kind of a cut would need once again, actual tapering impact to start. But for that, we feel that, some of the steps taken, for example, the lower swap ratio, swap percentage given by RBI to the banks for FCNR and so on will continue, and whatever little control on gold, we'll continue to see the balance being achieved on CAD side. CAD will reduce substantially in a hurry, we don't think so, but it will give little support in terms of inflow. And as we keep seeing, from October end onwards, the after effect of good crop arrival, one needs to really be watchful how inflation plays out, because manufacturing inflation is already almost, sobered down completely. So one needs to see basically the fuel and the food inflation. So like that, there are certain, internal things which can probably give little support to the markets. But as what I said, we will remain pretty vulnerable to some of the global events.
According to you, do you think that there is a possibility that the second half with the next few months, now that the rates have been aligned with what inflation is doing, you think there could be a possibility of further rate hikes?
I would rather think that as what he has made statement, that he will watch and be open to take action on either side. So the key call would still continue to be how is the inflation panning out over next couple of months. That will give little, stability on inflation front will drive the next move. And of course the important part was the taper is delayed, but quite a few people globally need to still understand when is it coming. So before taking a concrete move, I think both these factors will be watched by RBI.
Right. In light of that, Amisha, what's the reading for banks right now? A lot of brokerages are staying muted on, what they expect out of banks, at least on the upside. Not much is anticipated. Even this time for earnings, NPA pressures are likely to weigh down upon them. But since they've been beaten down already so much, you think that the pressure could be limited this time?
No, we think that, like the way on upside, Bank Nifty and a few banks led the way up. I think whenever market are sober or in corrective zone, Bank Nifty will outperform that. Bank Nifty will perform even worse than that, meaning that the pressure on Bank Nifty and bank stocks will continue to be little higher because of their overall weight in the index, because of their over ownership, as also the fundamentals being continuously challenged. So I think banks' performance will be broadly very closely linked to how inflation pans out, because the rest of all the things in terms of asset quality, compression of NIM, or treasury gain or loss is more or less factored in and around this price. If we see a respite on inflation, yes, one can then start relooking at the banking and financials.
So what exactly are you recommending to clients, Amisha, at this point? Is there a specific pocket that looks more lucrative where investor wealth is going to be created versus just staying on the sidelines and not investing equities at all?
No, of course. We think that the rural part of India should behave much better in demands in terms of their spending and demand post a very good crop which is expected as of now. So we are very bullish on Hero Motors, where we think that the spread that they have, the kind of vehicle launch that they have planned, and most of these purchases are not too closely linked with the interest rates and repayments and cost of purchase. So this demand should continue to be much better than the rest of the four-wheeler pack. These are highly free cash generating, very high ROE companies. So we think that they should continue to do well. Even for Bajaj Auto, the exports is a very great soothing factor. So this two-wheeler duo we like in this order. And we think that even in case of telco, some of the new launches which have happened in Land Rover Jaguar, I think they are at almost more than double or almost triple the price of their earlier vehicle range, which should give a very good boost to their margins. So telco continues to be amongst a good one. Of course, the call is not on India, the call is on their international operations. And of course, within the tech side, Wipro and Tech Mahindra are the two stocks we continue to push, and we like that. We think they should do much better. These are the broad two pockets, apart from some of the very select names like Britannia or United Phosphorus, ING Vysya Bank. These are some select names that we keep recommending.
Do you see cement continuing to be a sore spot, Amisha?
Sorry, can you please repeat your question?
I was talking about the cement pack, the likes of ACC, Ambuja, Grasim. I mean, while there have been reports suggesting that they've actually gone ahead and taken price increases, the fact that they are reducing the overall plant capacities, there's not been much demand pickup yet. Will that be sustainable, viable is another question. But for cement as a pack right now, what's the view?
No, the cement pack at this juncture we are not very bullish. Though some select, price increases have happened, a few have been rolled back, I believe. But no, we are not quite bullish at these valuations on this pack at the moment. And particularly after the way the entire ACC Ambuja got restructured, we are not very optimistic at this juncture.
Got that. Amisha, thanks very much for joining us. Really appreciate your comments here on the show. Amisha Vora there, Prabhudas Lilladher with her views on